Today, ladies and gentlemen, as we head into the end of the year, I can't help but feel nostalgic, reminiscing over the last year, talking about my best and worst stock picks, my stock trades that have really shaped my investing philosophy and how I look at my stock portfolio and how I generally go about buying stocks these days and what actually appeals to me. So I thought it'd be fun. I thought it would be insightful to not only look at my best and worst stock trade, but just tell you guys exactly what impacted me the most. So in the clarity of my transparency, this holiday season, do this channel a special favor, folks, and just hit that like button, because the first thing we really should point out is this incredible rally that is happening this day leading into the Christmas. Many of us hoping for that Santa rally, that Christmas rally that could potentially just be a dead cat bounce into the Christmas holiday weekend, followed by farther pain. Hopefully not, but could be the potential of further pain into the end of the year. And only time will truly tell here, folks. But just take a look at the green today. Tesla at over $1,000 again. I mean, it's up over 6% today. In fact, if you are largely exposed to the larger cap companies, you're probably sitting pretty happy today anyways. Hopefully tomorrow is just as good on Thursday before, again, Christmas Eve on Friday. But unfortunately, not to rub the salt into too many wounds, but whether you're in the Chinese companies or a lot of the smaller cap, higher risk companies, still a lot of red across the board here, folks. So let's put that aside and let's just talk about some of the most impactful things before we get into the best and worst stock trade here, because my goodness, guys, a few things have hit me hard this year. One of the biggest realizations was, a lot of you pointed this out saying that, hey, you guys are no longer dividend investors, you are growth investors. And I would beg to argue that there's a difference between growth investing and the way I look at myself investing, because I know this channel started as a dividend cash flow, passive income styled channel, but I've realized that if you narrow your view too tightly into the dividend side of things, you really miss what I truly believe is the path of least resistance to wealth. Those absolutely beautiful, best balance sheet companies on the planet. And unfortunately, sometimes they do not pay dividends. And even though I only hold like 4 companies that don't pay dividends, a lot of my larger caps pay really small dividends. And to give you a fun example of maybe not even a larger cap, I mean, when you go into the REIT sector, for instance, this year, a lot of people would rather focus on 6, 7, 8% yields coming out of their real estate investment trusts. But I was looking for the best possible REITs, not highly focused just on the cash flow, at which I discovered things like Stag Industrial. I mean, I was only getting a 3 to 4% yield off of that, but my goodness, the growth that is offered me this year has been astounding. But I don't want to put aside the fact that I think, Facebook, Google, Tesla to me were some of the greatest business models and greatest companies on the planet, and that just because they don't pay cash flow doesn't mean that I shouldn't own them. I think there's proponents for this in my portfolio. I can't tell you what to do specifically, right? So another big thing that has changed for me, aside from, not being as dividend centric, is cryptocurrency, which I'm going to say right now is in probably a huge bubble, and it's going to have a wicked crash, man. Whether we're talking NFTs or 90% of these altcoins, they will not be around in the next decade. This is the equivalent of early day internet technology here, but I love learning it. I see huge value, huge potential in this stuff. So I started buying Bitcoin this year. I haven't added Ethereum yet, but I'm thinking about it, and I'm surprised that Bitcoin has been holding up this well. But just remember, guys, these things are volatile, highly risky and speculative, so I only use it as a tiny percentage of my portfolio to see if it can truly outpace kind of somewhat of this inflated market, or this hyperinflation with our dollars, right? And just see what it compares like to gold. I really like messing around in that realm. But putting that aside, folks, let's just take a breath. Let's take a moment and talk about these best and worst stocks that I bought this year. And the first one has made me over $30,000 this year in capital gains, which are going to be painful to pay money on. But let's talk about taxes on, but let's talk about MindMed, the psychedelic industry. At the beginning of this year, from January, February, and I think into March, I was selling my position off in this wonderful kind of speculative investment that we took on. I think not this year. I think we took it on the year prior, but we didn't start selling it till this year. So this will be the year I pay cap gains on it. But you remember when we were buying this thing for like 30, 40, 50 cents on the dollar. And some people in our chat group made over $500,000 on this trade. This thing was like the lottery ticket to our dreams, and it worked out substantially well. Now, I am still highly bullish on this sector for some of you that might still be holding this company, because like I said, this is one of those things where you kind of want to set it, forget it, come back to it in 5, 6, 7 years once we start getting through those phase trials. And speaking of those phase trials, they have been moving along quite nicely because MindMed tends to lead this industry industry when we're talking about the LSD for anxiety here, which has just got approved to move into phase 2B trials. And typically what I say is by phase 2A trials. Typically by phase 2B, phase 3 is when we start seeing companies build interest in buying these out. And I have a big prediction right now. I've seen this happen time and time again in the pharmaceutical industry, where companies are usually trading for 500 million to $1 billion in a market cap, but they're involved in CBD or something that's actually a little bit more progressive right now than psychedelics are. And when they actually start proving out that there's huge potential to the trial outcomes by phase 2B, phase 3, that they get bought out by a conglomerate that doesn't have any exposure, whether you're talking your J&Js, your Pfizers, your Merck companies of the world, right? So that's what I'm going to be looking for as we head into the phase 3 area. But they are moving along nicely, and they even appointed a new CEO, which was the biggest heartbreak for me behind this company, because many of you might remember JR, and I remember Kevin O'Leary saying this is the guy to lead the psychedelic renaissance. Unfortunately, clearly it wasn't. A lot of speculation about why he left. I'm not going to say anything here, but they did finally appoint a new chief executive officer, and like I said, I'm not as pleased about the shift in management, but I mean, this is a psychedelic company. Management isn't that important. Once these trials are up and running, it really comes down to just, you know, what statistics and are they going to prove that these drugs are actually useful. So I really believe in this industry still. I really want to see a change in mental health, and I think this is the forefronted industry to do it. Leading us into my biggest loss of the year here, folks. The space industry. Let's talk about the space industry, shall we? Being momentous. The stock that I thought was going to give me the largest exposure to SpaceX is a publicly traded SPAC that was coming to market, and I'm really glad I got out of this one because, my goodness, leading up to a moment before the pop, a lot of people thought maybe this pulled back just because I kind of went through a Nikola thing. I'm going to call this probably comparable to a Nikola moment, right? Because this momentum really would have carried on if things were nice and smooth into the future. But unfortunately, if you don't know this company, guys, they were building out satellite infrastructure, last stage delivery. They weren't involved in building the rockets or getting the rockets to space. No, they felt they had a system that was 90% cheaper than currently existed to get those satellites into that orbit where they needed to be, and they were even offering infrastructure to repair those satellites without having to bring them back down. What a brilliant way to probably what I thought was going to be the quickest to cash flow company in the space industry, with contracts and tests that were lined up with SpaceX. And I was like, oh my God, guys, this is gold. This is going to be gold. It's going to be like probably one of the best space companies you can buy. And you know what? It wasn't, because unfortunately the CEO was kind of one of these seeking asylum Russian espionage type guys. Probably not espionage, but it's fun to think about it that way. He just kind of, you can't come to the US, run a massive space program, but not be a US citizen. And he had ties to Russia that I don't think were really prevalent, but because of that causing a lot of problems with the government, a lot of investigations going on, it completely shut down all of their projects. It put things back a whole year. SpaceX completely dropped them. And oh God, guys, it hurts so bad. I mean, this company has Chris Hadfield as one of, you know, the guy the playing the guitar and Rocket Man from the actual space station guy. Yeah, that's part of the board of directors here, like incredible board members. But unfortunately, shit happens, guys. This is some of the risk that comes with investing in newer industries. And yeah, they're still trying to get ahead. They still have a future, in my opinion, but that future has been pushed out to a place that's too speculative for me at this point. So I'm not a fan of this company anymore, unfortunately. And yeah, I lost, what did I lose on this one? I think about $5,000. It's kind of great that that's my worst trade of the year, because damn, we've done much better. But these are the things that I actually bought and sold. I don't do a lot of trading, guys. I don't do a lot of selling. It's really rare that I actually sell stocks. I think I can count maybe 6-7 times this year where I actually like bought and sold a company. So, I mean, you know, you take this with a grain of salt. I mean, there's probably people out there that are like day traders. I made 40,000 today. I lost 50,000 today. I made 100,000 today. That's not me, all right? I'm very methodical, or at least I like to think I am, you know. But putting all that aside, folks, I mean, as we head into the holidays, I really want to wish you and yours a very safe, you know, and, you know, healthy Christmas or whatever you celebrate, because unfortunately, we're kind of heading into this pandemic 2.0. And yeah, I've missed out on a lot of family events, a lot of Christmas parties that I had to turn away because people getting sick, a lot of crap going on. So personally, not that much fun, but you know what can be fun is I can spend this time with you. So what I'm thinking about doing is perhaps doing some live streams over the weekend. Might do a live stream tomorrow over at our live stream channel, The Passive Income Educator. And I think it would be fun to just get together with you guys and just chat, drink some hot chocolate, and have a wonderful evening. So if that sounds good to you, consider subscribing, and I'll see you hopefully very soon. Stay cool, stay awesome, guys, and I'll catch you then.